Yo, what's good everyone? So I thought I would do something a little bit different for today. We are going to be doing a video analysis of the markets. This is actually something I haven't done before, but I just wanted to let you guys know that I haven't forgotten about the course and I'm still working on that. I'm just a bit off track for a while, but just going to do this compensatory analysis for today just to let you get to know where I get my ideas from. So let us look first at the monthly auction context, right? So we sort of had this after the conflict in Iran was de-escalated. We sort of had this large push up. We then balanced here. We created one balance, and then we traded out of this balance, rejected this balance to create another balance lower. So this is where the most current reference for price was. And then yesterday, which was Wednesday the 29th, we traded out of this balance. We actually rejected the high of this balance, so we traded back through this balance and we rejected, and we closed outside the balance. All right. So we closed outside the balance. That means we were officially in a state of temporary discovery. It's different from like long-term discovery because usually after one day, if you just have one day that trades outside the balance, what's going to happen usually is you're going to see a trend continue in the other direction, or you're going to see it trade back through it. So what happened today is this was just a positioning, inventory risk management sort of trade-off dump that we had at the end of the day. So today, which was Thursday, we saw more risk on higher volume, right? How can I tell that it's high volume? Well, if you look at the length of the 1K volume chart, right? You'll see that during the previous day we sort of had this large we sort of had this large sell off, right? Very high sell volume. So when we see that we have this higher overnight participation as well as high volume participation along with the trend, then we can sort of assume that we see high risk on volume, right? We're correcting that inventory from the previous day. So now that we're very risk on, another thing that tells us that we're very risk on is that dealers are net short gamma, which means people as traders, investors are buying lots and lots of options, right? So what we see here, so our key levels for the day, right? So our key levels, we have our previous mean. This is marked in orange. This is just basically going to be the high volume node at which we traded for the 6 previous days. And the reason it's going to be marked in orange is because I mark all my means essentially in orange, right? And I don't really see this as a key level anymore because I see it as sort of like we accepted during our TH session, right? We accepted back through this balance. As you can see, we opened at around 6. We opened at 6:30 my time, 9:30 New York time. So we then came out of this balance. We rejected, and then we saw at the open price level, we saw very high responsive participation. So this is where we saw large aggression coming into the market, and then we trended the rest of the day. If you actually look at the cumulative volume delta chart, what you will notice is first of all, you have to be able to see this very like sort of niche story that's going on in the market. So as we opened, we saw large aggressive volume. So this is mainly aggression that's driving this. But now we see passive participation. This is passive participants getting out of the market because price was overextended. So we're going to see passive selling, just inventory management from the stealing. And then we see sort of at like this order block, this I don't really like to use order blocks as an ICT, but it's still a good reference point for logic if you know how that works. So this is basically where you'll see the net. You're not going to see this low get broken because you're going to see large aggression come in, and we saw again large aggression drove price to about the high. And then from here on, this was just sort of passive inventory management that drove us higher. So this is why our second key zone for the day is going to be this purple zone at the bottom I marked out. And this is going to be a very heavy responsive node. What is a responsive node? Is basically a high volume node that can act as support and resistance, and it's like at the edge of the range. It's sort of like an order block. All right, so our next key level is going to be this low volume node on this volume profile. So why is this low volume node significant? Well, this is essentially going to act as support and resistance. Why? So, why is this? You have, first of all, you have to understand how this low volume node formed. So what we had is we essentially had a balance, right? We had a balance. Now we traded out of that balance. And now what is going to happen here is essentially there has been no volume built here, right? There has been no volume built here. So this is basically going to be a large low volume node on the volume profile. Oh, what the heck? Large low volume node on the volume profile. So there's going to be no volume built here. But once we start to balance in this range and we start to use this zone as support, start to use this zone as resistance, and we start to trade lower from this zone, then we start to see volume built here. And the difference from here, this key zone of support, this is actually going to be a low volume node. So now you understand why this low volume node is actually going to act as resistance, right? All right. So this is going to be our key node of resistance. This is just going to be a weak resistance. So the reason this is going to be a weak resistance is if you look at oil, right, we had our re-escalation in, oh my goodness. We're going to have our re-escalation in the Iran war. So at around the 2nd of July, you saw that large pump all the way up to 94, 95 levels. This week, however, we saw a large gap down, and we still haven't traded back into that gap. So what we're going to see on Friday is basically going to be rebalancing into the weekly close. So the story for sort of the next week is how the next week is going to play out. We're not going to see a lot of large initiative activity on Friday. So if we trade back into this range during overnight session, I like to write my theses as sort of like an if-then statement, right? So if overnight session does not build high volume at this point of resistance, look for acceptance longs from the zone of support at RTH open, provided failed auction past the order block. This is going to be our thesis for the day. This is just going to be an if-then statement. So what do I mean by this, right? So if we trade back past this mean, we know that this low set in by the RTH session, this should be a zone which we should not trade past if the Iran war is not escalated, because we have this growth in the AI sector. So if oil does not trade back into that gap, then what we can expect is we can expect to use this zone as support, and then we are going to be just trading back past the RTH range. So this will be excellent long opportunity over here. Next, what we're going to see is that this zone, if we reach this zone, this is going to be a key zone of conditional acceptance or support. So as it's Friday, we are not likely going to see much initiative activity. So a small short from here could be a good idea. But however, if the growth continues into the end of the week, then you'll see what you're going to see is you're going to see value building higher for the next week, because this value is just going to be sort of like our area from here to here where the drop in prices was priced in. But now that we're growing back again, we could likely see an initiation past this zone. This is why it's very key to monitor how everybody's going to be positioned into the markets. And then once we initiate past here, it's the end of the week is going to be Friday. So what you're going to likely have here is you're going to have price stall for a bit, and then we're just going to close over here. This is basically my thesis for Friday, and I'll see you all in the next one. I'm going to get to posting this one in a couple minutes. All right. Thank you everyone for watching.